Welcome back to another episode of the Climb Finance Show, where we talk about investment markets, economics, business, and other topics. Today we're going to talk about inflation. I'm glad that you are watching this video. Tomorrow is an important day for the economy. Taking a look here at our economic calendar for the US shows that tomorrow morning there is a CPI release, Consumer Price Index release at 8:30 a.m. tomorrow. And let's talk about it. So first and foremost, inflation has been such a big deal over the last 2 years, really since we got out of COVID, whether it was from, supply chain issues or from loose monetary policy to kind of boost us out of, COVID. Certainly, just take a look back to a year ago. Inflation was over 8%, as this chart shows our monthly inflation reading year over year. Take a look at the 5-year, that 2% level is so key because that is the target rate that the US Federal Reserve sets as their goal. It's their economic policy goal, 2% inflation. Clearly that got away from them as inflation neared 10% last year, but things have been getting under control recently. The Federal Reserve's policy, increasing interest rates has clearly played a factor in reducing inflation, and that's great. So what about tomorrow? What can we expect? Here we have the median forecast for yearly CPI at expected 3.6%, and core CPI, which is just CPI excluding food and energy prices, as those are seen as volatile, at around 4.3%. So, just quickly taking a look at the chart, it's a slight increase, but things look under control. They really do. But, is this slight increase a reason for concern? Let's see what the articles are saying. So here we got this Morningstar article from Lauren Solberg, essentially saying that the CPI release for tomorrow is going to show more good news for inflation, aside from the higher gas prices. And while it's still above the Fed's target of 2%, price pressures are slowly moving in the right direction. And so overall, this says it's good news, this article, saying that things are getting under control, even though there's a jump in prices at the gas pump. But investors will have to wait a while before it returns to acceptable long-term levels of 2%. And then, bottom line, for the August report, CPI expected to show 3.6% increase in inflation from year ago levels. And that's well below last summer's peak of 9.1%. So overall, it's pretty good. And, according to this, there's really nothing to be too concerned about. We move over to this Reuters article by Stephen Kulp. Slightly different picture, saying U.S. stocks sag and crude oil prices are surging with inflation data due tomorrow. A little bit different, saying technology stocks have dropped down a little bit today as the trading session came to a close and oil prices jumped as everyone's kind of looking ahead to the inflation data that's going to be coming out tomorrow morning. It's been interesting because if you look at these tech stocks, they've crushed it this year. They've done a great job. And without a doubt, the decreasing inflation rate has played a great role in helping these tech stocks, because as inflation drops, you know, it decreases the chance of further interest rate increases. And these tech stocks, which are primarily growth stocks, are greatly aided by lower interest rates, less restrictive monetary policy, the ability to borrow funds, especially with a lot of these tech companies, as I said, still in growth mode, so not exactly turning as much of a profit during restrictive economic contractionary policy times. So as long as inflation comes down, things should be looking good. Taking a look at this Fed Watch tool, which shows, we have a meeting September 20th, Federal Reserve meeting. Obviously, everyone's like, what are they going to do with the interest rate? Are they going to keep it at 5.25 to 550 basis points? Or are they going to raise it? This shows a 93% chance of keeping interest rates at the same level as opposed to increasing them. Currently, this tool and the market is pricing in no chance of an interest rate cut, which I don't think anyone's expecting. But as long as inflation is kind of within this range of 3.6% for CPI and 4.3% for core CPI, then we shouldn't see any interest rate changes at the next meeting. And overall, that's a bullish sign. It's a bullish indicator for the market, because no one wants to see any more interest rate increases in the investment world. And so that's all I got for today. We'll see what it is. We'll see what the inflation reading is tomorrow. But that's it. Shorter video today. I appreciate everyone tuning in, and I hope to see you at the next episode. Have a good one.